What's up everybody? Welcome to the Stocks channel. My name is Cory and today we're going to take a special look at this stock market correction to see how far this correction could go, where we could possibly find support, and how long we could expect this correction to last for. We will be taking a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so with these special weekend updates, I like to start out by taking a look at the bear bull survey, and we can see that we now have more bears than bulls, with 38% bears and 37% bulls, with only 24% people neutral. So this sentiment is important to pay attention to because typically speaking, the retail investors are wrong, and if they get bearish too soon during a correction, it could mean that we're due for a bounce. So right now this is a pretty even split, and really the stock market could go either way because it does look like we're at a crossroads where the retail investors don't know what to expect, and half of them are bullish and half of them are bearish. So there's not too much we're going to learn from this survey other than the fact that we can tell that we're clearly at a crossroads between bears and bulls, and we're just waiting to see how deep this correction could go. The deeper the correction does go, the more people will flip to bearish, which is usually the opposite of what you want to do. The deeper the market corrects, the more bullish you should become in the long term, because like Warren Buffett always says, be greedy when others are fearful and fearful when others are greedy. So we're definitely in a greedy market right now, and it's very obvious with stocks like GameStop and AMC going absolutely parabolic, just trying to trigger short squeezes, that this market has definitely reached a mass greed and euphoric state. Typically in a greedy market, you don't want to be too exposed to the long side, and you want to manage your risk very carefully. So jumping over to an SPX weekly chart where every single candlestick on this chart does represent one entire week's worth of price action, you can see that we did get a price action close below the 5 EMA. That is a significant price action close on the weekly chart because as you can tell from this chart, we have not been below the 5 EMA in a weekly chart since October of 2020. So ever since November of 2020, we've broken above that 5 EMA and we've been staying above that 5 EMA for this entire bull run. Intra-week, you can see that we did wick below it, but we never actually got a price action close below that level. So as of this week, you can see that we did close below that 5 EMA, so it's something that we want to pay attention to because it is possibly a warning sign that this market wants to go lower. So if you're watching this and you're thinking, oh, well, it's too late now because we didn't know that was going to happen, don't forget that it's impossible to call a top perfectly. If you go from the highs to this low, we've only dropped about 3.81%, which is not going to wipe you out if you're trading properly. And if you are a member of the Stocks Channel Discord, I did issue this statement on Thursday where I said take profits at 326 on the triple Qs. Lock in profits and try to get to a 50% recommended cash goal. This is a strong suggestion as markets continue higher. We raise cash on green days so that we can buy lower on red days. So if we now go look at a chart of the triple Qs, this was on 128 that I said take profits at 326 for the triple Qs. So you can see on 127 on the triple Qs, we had a huge sell-off and we closed down around 319. And then the next day on 128, when I said take profits at 326, we did go as high as 326.42 for that day. And you could see we did close much lower around 321. So if you took my suggestion and you took profits when the Qs hit 326, and you went to that 50% cash goal, Friday really wasn't that bad for you because one, you took profits and you got into cash. And then the second reason is now you can start putting that cash to work at lower and lower prices. So it's very important to be a disciplined trader. And that's why on the Stocks Channel Discord, I always talk about having a cash position as the markets go higher. And that is why I'm giving you these resistance and price targets levels that you should be locking in profits. If you got greedy like Warren Buffett says, then you got absolutely slaughtered on Friday. But if you were disciplined and you were fearful when others were greedy and you locked in some of those profits, then Friday really shouldn't have been that bad for you. And if anything, it really should have just been an opportunity to buy some really good stocks at lower prices. All right, now I want to jump back over to the SPX and I want to take a look at how deep this stock market correction could go and where we could expect to find a bottom and start bouncing to head higher. All right, so remember this is a weekly chart and you can see that we did get that price action close below the 5 EMA, which is a warning sign and means we should prepare for the worst and expect the best. If you prepare for the worst in the stock market, you're always going to be ready for the worst case scenario. And if it does play out, you're still prepared and you still have enough cash to figure out how you're going to trade this market. However, if you get too overly confident that you know exactly what's going to happen and you go all in on one position, either long or short, whichever direction you're thinking the market's going to go, you could very likely be wrong and you're still going to lose a lot of money. So we don't want to get overly confident that we know the market's going lower, and we don't want to get overly confident that the market's going to bounce as soon as Monday and we're going to start running back to new all-time highs. So it's very important to have a balanced approach and be ready for either situation, and that's what cash allows you to do. You don't need to short because the market doesn't have to go lower just because you think it's going to go lower. Cash allows you to be flexible to buy low or hedge and really gives you the flexibility to make money in any market condition. So when we're looking at possible support levels on this weekly chart, the first thing that stands out to me is that we still haven't touched this 13 EMA, which is right around 36.81. If we break and close below the 13 EMA, typically speaking around the 20 simple moving average, you're going to find some significant levels of support because a lot of buyers are going to step in at those levels. So looking at the 20 simple moving average back in October, even though we did close below it, the very next week we blasted through all of the moving averages and we closed above all of them. So the 20 simple moving average isn't like a 100% science that you have to buy at that exact level and it bounces perfectly and starts heading higher. It can easily go below that level, but there's still a support around that level that people are buying, and eventually the buyers will win and the market will head higher. It's going to take a lot to send this market down big amounts, because we just had a crash last year, and typically the market doesn't crash 2 times in a row in that short amount of time. Anything is possible, so prepare for the worst, but you need to know, historically speaking, it's not likely we're going to see a stock market crash. This is just a completely normal and healthy correction, and we're just trying to figure out if it's going to be a 5% correction or a 10 to 15% correction. So from today's close to that 20 simple moving average, which is right around 35.80, that's only about another 3.5% drop before we could find significant support. So don't prepare for a huge sell-off because it's possible we only go down about 3 to 4% more from here and then we start bouncing and heading higher. The next level that stands out to me is the 50 EMA, which is down about another 9% lower. So you still have somewhere between 3.5 to a potential 9% drop before we're at significant support levels. So we want to watch the price action when we get to those levels to see how it's going to behave. If we start bouncing and heading higher and generating bullish trending on a daily chart, then we'll know these support levels are holding up and we probably saw the bottom. Remember, this is a weekly chart, so it's going to take another week or two before we get to these levels unless we see a massive sell-off and we just start plummeting down. Now, looking at the volume of last week's sell-off, it wasn't completely that high, and we do go back to 11.9 and we see a very similar amount of volume, and the price action didn't really move much that week. So while there was a lot of selling, and that's definitely more volume than we've seen lately, it's not like we saw people just dumping all of their positions in a huge volume way. It was just more of a natural correction and a natural sell-off as people are positioning to take profits and get ready for new market condition. Now, going back to a daily chart of the SPX, you can also see that we're on top of the 50 EMA for a daily chart, which is right around 3,700. And that level did hold up as support last week, and we did bounce and close higher off of that level. You can see in the short term, we do have some bearish trending building up, but in the medium and long term, we're still in a relatively nice bull trend with that 20 simple moving average way above the 50 EMA. So it is completely possible that we already saw the bottom of this correction, which was only about a 4% drop from the highs. That is a completely normal shallow correction that allows bull markets to cool off, resets all of the greed, and then we can start heading higher from these lower levels yet again. As people become bearish, they will actually get short squeezed and they will send the market higher. There's your 2 scenarios where we could either bounce off of this level or we're going to go down about another 4 to 9%. We don't know which one's going to play out until we see more price action because, as you can tell from this daily chart, we're sitting on a very critical support level. So I'm not going to say that we're blasting through that level because I don't guess. I let the price action tell me what's going on, and then I be objective about which direction the market's going to go. So this $3,700 level on the SPX is going to be the key to watch. If we break and close below that on Monday, that's going to be your sign that we're likely going to those lower price targets that I gave you around 3,600 and 3,580. If we continue to bounce off of these levels, one, that's a great time to take more profits if you forgot to take profits last time and get into a cash position, but it's also a sign that we likely saw the bottom of this correction and we're going to start heading higher. So be flexible as a trader, but more importantly, be disciplined. If you're disciplined and you know when to lock in your profits and you know how to plan for the worst and expect the best, then you're always going to be a profitable trader. That's what I'm trying to teach you on the Stocks Channel Discord. And if you still want to learn how to trade this market and how to be profitable in any market conditions, come check out what we're doing on the Stocks Channel Discord and join our disciplined and profitable trading community. You can find out how to join the Discord by clicking on the link in the description of this video. So remember that we're still in a bull trend, and if I zoom out here, you can see that we are forming higher highs and higher lows, Even though we are in jeopardy of a short-term bear trend, in the longer term, we're still bullish on this market. So don't get overly bearish and don't just try to massively short this market because you think it's going much lower. Like I said, it is extremely possible that that was the bottom at 3,700 and we're going to start bouncing and heading higher. So back to this weekly chart, you can see that that 13 EMA is around 3680, which is very close to that daily level around 3,700. So I don't want to see you panic selling at a support level because it's very possible that even if we are going to head lower, that we still have to see a bounce. Remember that the market doesn't just go down like we saw in March in a straight line. That was a historical event, and that was the first time the market ever dropped that much that fast. Typically speaking, if the market wants to correct, it's going to see some bounces on the way down, and it's going to do more of one of these numbers where it goes down over a long period of time, and there's going to be plenty of trading opportunities with downs and up days where you could buy low and still sell high as long as you're disciplined in locking in those profits quickly. You don't want to try to hold long in a bear market, and you don't want to go short in a bull market. You want to stay on the side of the trend, and the trend is always going to be your friend throughout these times. So looking at this weekly chart, don't get bearish on a bullish trend. We still have the 5 EMA well above the 13 EMA, and all of these moving averages are still in strong bullish trend mode, so you don't want to just assume we're going to a bear market until we see something continue to shift in this trend. So like I was saying, the daily trend is showing some bearish signs, but we're also sitting on top of a support level that we're still holding up above forming a lower low. If we can form a higher low here, and as you can see on closing prices, we're still above this low, so we're still at a higher low situation, and we bounce and continue higher from here, this bull market is back on and we're going back to new all-time highs. So I hope this special weekend update really gives you some perspective on what's going on in this market and why you shouldn't get too bearish on this correction and why it could still be a chance that we're heading higher off of these levels. Remember, if we break below 3,700 and we close below that level, that will be your sign that we're likely going into a deeper correction. So plan accordingly and best of luck to all of you. I hope you're enjoying your weekend. I'll see you all in the Stocks Channel Discord, and I'm really looking forward to a very exciting week of trading because volatility is back, and that's where we can make a lot of money as traders. And as always, I will see you in the next episode.